Quickly, I want to give you a breakdown of how I took this trade. Boom 500 in index. I also took a trade on VIX 91x. All right, so let me quickly just give a summary of the concept I use, which is SMA, structural manipulation and area of interest. Structural manipulation and area of interest. What does that mean? If a market is trending up, for example, creating series of higher highs and then break the recent low that is created and then come back and take the recent high to establish a higher high, then you have your range. Okay, now where is the manipulation? This is the manipulation to the downside. Why is it manipulation? Because in an uptrend, market is not supposed, all right, to break a low. Okay, the lows are supposed to be protected, but in the situation where the low is broken, you know that a manipulation has happened. All right, and so this is where manipulation happens here. This is where manipulation happens. Okay, so from this low down to this recent lower low is what we call area of interest. Okay, area of interest. All right, now this can work as a reversal. It can also work as a continuation. So if you want to always join the trend, this is a good way, all right, to join the trend. The same thing when you are going, when the market is falling, is dropping, is creating series of lower lows. But by the time a high in an uptrend, in a downtrend, the high is taken, and then the low was taken to create a lower low, then you have a structural manipulation, right? And this is your area of interest. This is your area of interest. Okay, you can see now our point of entry within the area of interest, right, is not gotten from the time frame where you are seeing the structural manipulation. So you are not going to enter from this shoulder, neither are you going to enter from this head. You are going to enter at a single price point from the higher time frame. Okay, so by the time you alight this area of interest, you zoom to a higher time frame, which is the daily, right? You zoom to a daily time frame. Any price level, it could be a gap, it could be a V level, it could be an A level. So whatever you see here is what you're going to use. The first one you see here is what you're going to use. And if you don't see any key point here, just simply look at, all right, just simply look at the left and you can pick any significant point. I'm going to show you an example, all right, on the left side, and use that as your point of interest. But then if this whole stuff here on the higher time frame, if it's just a single candle body, this is a very low probability trade, all right, and so it might not hold. Okay, if it was just a single body, that means if this whole price action happened in a single body within the daily time frame, it might not hold. Okay, but if we are having wicks here on the daily, we are having wicks, rejections at this level, it's a bit cool. But by the time we have just a single price line within this area, then that's a high probable trade. Okay, so let's go to the chart. Okay, let me use this 90 first as an example. So I entered this trade, it was yesterday. Okay, let me cancel and see, and let's see on the 1 hour. If you look at it, so market has been creating a series of lower lows. All right, so you can see this was the last low that was taken, and then This was the high of the low that was taken. Okay, so you are having structural manipulation and then a break of structure. All right, structural manipulation number one. Number two, a break of structure happened. And so what do? You mark out your area of interest from the body of this low down to the wick of this lower low. So what you want to do is to now go to the higher time frame, in this case the daily time frame. And what do you see here? You're always seeing the wick. Okay, so we can now trace to the history and see the level that has created this week, the level that this one rejected off from, and this was standing out here, right? This level, this gap was standing out here, and this gap has also proven to be significant in that price has been rejecting of this level, and it has immediate significance, right? It rejected it. Okay, so this is your single line of entry. So you come down again to the H1, right, to look for your SL. Okay, and that's one something I love about this system. It has an established SL and then an established take profit. Okay, so look at it. All right, a key level below this price point is this key level here. So your SL is just the wick of this key level, so which means we're going to enter at this region, which I did, and then stop loss just at the wick of this current resistance, and then target just before this, this is the immediate high that you see there. And that was how I caught this trade yesterday. Let me show you another thing interesting on boom 500. Okay, this one we're not going to the daily, but something interesting happened here. You can see that we already have SMA, structural manipulation. Market has been creating series of higher highs, and then what happened? This low was taken and market broke structure upward. So this was the low that was taken. The low was taken and market broke structure upward. So it's clear that we have our SMA here. So the next thing is to highlight your area of interest. This is your area of interest. So this is where you want the market to pull into and look forward to joining the current or the immediate trend. And so I went to the daily. Yes, I went to the daily. I saw, you can see now, this is a very low probability trade. Why? Because all of that price action happens within a single body candle. There was no rejection here. Now, note something, that prior to now, this week wasn't there. So we just had a single body candle. Okay, this is a very low probability one, right? Market might eventually go to your direction, but a lot of times it might just take you out. But then I just took it, because I was risking something little I could afford to lose. Okay, so this is it. I couldn't find it here, so I went to the H4. The H4, what did I see here? Remember, this was the this is the price action that we saw on the H1, right? So you notice something really good, that the level that we have here that is significant here is this level here, this RBS. This RBS. This is an RBS, right? So this was where I took the entry from. Was it 4 hours? Sorry, was it 4 hours? Let me check. I'm coming. Okay. 4 hours. 4 hours, and I saw this significant level right here. Okay, saw the significant level right here. So this was where I entered this trade. Exactly, it was a sniper entry, because this is the resistance after this price line, and so targeting just before the immediate high, right? This targeting just before the immediate high, and that was how I got this. It's about 1:11, so you can see how beautiful this is, and it's very simple. So all you need to do is to master your structure, SMA structure, and then identify your area of interest. Go to a higher time frame to look for a single price point to enter. Right? Why is that very important? Right? So if, for example, you want to enter from the shoulder, which a lot of people do, you enter from the shoulder, look at it, you would have been stopped at, right? Except you now put your stop loss below this. By that time, you know, your arrow would have been reduced, okay? Or some persons will look forward to taking it from the apex and they would have missed this move. Okay, so I think price react to higher levels. We can look at lower levels for structure, then our key point of entry should always come from the higher time frame within the lower time frame, price action. Lower time frame structure will look for higher time frame price points to enter from. So with that, you're going to have a good risk to reward and a high win rate also. Okay, and I hope this bless you. Enjoy your day.